All right. Okay, so we have got an amazing expert to guide us through our conversation today, and some more folks here from MSA who are going to be sharing some amazing resources. But first, I'm really excited to introduce Gladys Castro. Gladys is a business credit advisor with over 9 years of experience. She helps entrepreneurs launch and expand their businesses by helping them access capital, including loans. She loves to work with entrepreneurs in both Spanish and English. Great to have you here, Gladys.
Thanks.
Wonderful. And next we have Amanda Siskind. She is an associate manager of corporate grants for Main Street America, and her primary focus is the Backing Small Business Grant Program. And finally, we have Liz Shink. And Liz is a senior manager of marketing and outreach. She leads the marketing and communication efforts at Main Street America's corporate foundation, nonprofit, and other member partner programs. It's great to have you here, Amanda and Liz. And we're going to be sharing some more great resources, Amanda and Liz will, at the end of our conversation that Main Street America has to offer you. Okay, Gladys, I want to kick it over to you just to take us through our conversation today, especially when it comes to getting those resources for your business.
Hi, everyone. Like Brittany said, my name is Gladys Castro. I'm so excited to be here with you all today. If you have any questions along the presentation, please put them in the chat. Like she mentioned, we do have some time to go through them at the end. So please, don't be shy to ask anything that comes up at all. All right, so to get us started, we're just to review today's objectives, we're going to learn a little bit more about how to find funding for your business, how to become loan ready. We're also going to go through some tips to obtain grants. And then last of all, we're also going to share some resources from both AOF and MSA. All right, so if you haven't already, please take a minute to introduce yourself in the chat. Tell us your name, your business name, and location, where are you coming from today, and what you hope to learn today, right? All right, so let's get started. Let's talk about business financing. But first, let's do a really quick poll. How have you funded your business so far, or how do you plan to? Is it self-funded? Did you obtain a small business loan? Did you maybe get a grant? Do you have some investments? Or maybe you went through another way, right? Maybe like crowdfunding, family. What does that look like for you?
Thank you, Gladys. We have that poll is open. We're going to leave that open for about a minute so we can get all of those wonderful results, and we will share the results in just a minute. Um, Seeing a lot of great information coming in, and this should just pop up easily on your screen so that you can just click whatever is applicable to you. All right. Lots of folks have taken the poll. That's great. Gonna leave it up for just a couple more seconds and then I'll go ahead and share. Here we go.
Yeah, so we see that most people are self-funded, right? 70% of you mark that. Some of you have already obtained small business loans, so you may already be familiar with the lending process, right? A few grants, that's amazing to hear. We love grants. Some investments, and then a couple of people who have gotten funding from other sources, right? But yeah, so what we see the most is most people start with their own savings, right? Like funding it themselves. So let me ask you guys one more question before we jump into it. Tell us in the chat, do you think this is a myth or do you think this is a fact? And I think with the poll, we already know the answer, but it says most small businesses launch using a bank loan. Is this true? Is this a myth or is this a fact? Yeah, and as you may have already seen, this is a myth, right? Most small businesses launch using using their own funds, right? Entrepreneurs typically do that. So this is the continuum of what we typically see businesses follow when they're trying to fund their businesses. So typically for startup businesses and for people who are just starting off, right, 0 to 1 year, we see that they're typically funded by the entrepreneur using savings, credit cards, all kinds, right? And then sometimes even funds from friends and families. And then for growing businesses, those who have been around for 1 or 2 years, we see that they're typically funded by CDFIs. CDFIs are community development financial institutions, and they're essentially just an alternative to traditional bank loans. Sometimes bank loans are a little bit harder to access for a lot of entrepreneurs because they require, more time in business, sometimes like higher FICO scores, higher revenues, things like that. So for the people who are not at the point of getting a business through a bank, a business loan through a bank yet, CDFIs are a great alternative. So we see that for growing businesses, this is the most popular funding option, but CDFIs typically do, or some CDFIs do offer funding for people who are just starting up, and then of course for established businesses as well. So no matter where you are in your business and in that process of growing your business, CDFIs may be a good option for you. And then the last one is established businesses, right? So those businesses that have been in business for over 2 years, we've seen that they're typically funded by banks. And I think this also depends on, how much revenue they've been making and the kind of money that they need. But we see that for more established, they typically go through the banks. So this is, just a continuum, but as we mentioned, it kind of goes back and forth, right? It's very floating. All right, so let me ask you another myth or fact. It says lenders only use business credit to evaluate a loan application. Do you think this is a myth or a fact? Tell us in the chat. All right, so I see people are putting in their answers. Yeah, so this is a myth. Lenders don't only use business credit to evaluate a loan application. Many times, business lenders will use something called the 5 C's of credit. So if you've never been through the loan process before, you may not be familiar with this, or maybe if you have, you may not be familiar with this. But the 5 C's of credit are essentially 5 things that all lenders are looking for when they're looking to approve your business loan. So the very first one is your character, right? And character is also known as credit because it measures your reliability, right? Your reliability to pay back. Lenders expect to be paid back. So what they're going to be looking at is, yes, they'll look at your business credit if you have some, but they're also looking at your personal credit. And in your personal credit, they're not looking just at your FICO score, but they're also looking at your credit history because they want to understand what your payment history has been like, right? Like how you have behaved with debt in the past. So with a lot of small business loans, we have something called a personal guarantee, which means that if the business is to close or for some reason the business is not able to make those monthly payments anymore, that you, the entrepreneur, is liable for that debt, which is why we're not only checking business credit, but also your personal credit. So that's going to be the very first. The second one is capacity, and the capacity measures your ability to repay back the loan. So one thing that I always tell my clients is, when you go in to ask for a business loan, you have to have a very specific number in mind of how much money you're looking for. Because, for example, one of the biggest red flags is when people ask us, they come to us and I ask, hey, how much money do you need, right, to grow your business or to launch? And many times I hear, how much can you lend me? Or whatever you can lend me, right? That's not what we're looking for. We're looking for a very specific number to measure to see if you can afford to, if you're able, right, to that if you have that capacity to pay back that monthly basis. Responsible lenders are not going to give you a loan that you cannot afford to pay back, right? So if you're looking for a loan that's, let's say, for example, $100,000, if we're looking, depending on the terms and the the interest rate and the fees and all of that, that monthly payment could look anywhere between 2,500 to like 3,500. So if you're looking for $100,000, the lender wants to make sure and has to make sure that you could afford to make those monthly payments, right? And if you can't, they know that they can maybe offer you a smaller loan, but that's why it's really important for you to know exactly how much money you need so that when you approach a lender, you have a better understanding of your capacity, but also understand how much money you actually could take out if you're taking out that loan, right? So that's going to be the second one, capacity. The third one is capital, and capital really measures your commitment. With capital, we also we're looking at what we call like skin in the game, right? How much of your own funds are you risking, or how much money are you investing into your own business? And this is specifically important for businesses that are just starting off, and also for businesses that are growing, right? Sometimes lenders will ask that you have a certain amount of money already invested or ready to invest before they give you that loan, right? Because again, they're measuring your commitment to it. So some lenders may require, for example, that you have 20% already invested or ready to invest. But not all lenders will require that. Some may require 25, some may require 10. So when you approach lenders to talk about, what their lending process is going to be like, this is a really good question to ask, right? How much do I have to show any capital? Do I have to provide proof of that? But that's the third C, capital. And then the last one is collateral. So with collateral measures what you own, right? And as we mentioned, lenders expect to be paid back. So with the collateral, lenders will look at, how much do you have in case that you're not able to make those monthly payments anymore and they need to recuperate some of those funds. How could they do that, right? The good thing is that a lot of lenders will even allow you to use whatever, if you're purchasing, for example, inventory with those $100,000, they might, or like equipment, sometimes you can even use the things you're purchasing as the collateral itself. Some lenders will require that you have a dollar-to-dollar match in collateral. So if you're looking for $100,000, they want to see that you have $100,000 in collateral, but not all lenders require that. Some might not even require collateral at all, and some of them only require it depending on like the amount of money that you're taking out. So this is another great question to bring up to the lenders when you're meeting with them. And then the last one is the conditions. And conditions really measures the timing of the loan and then your expertise in this industry or with your business. So as I mentioned, right, responsible lenders want to give you a loan that you can afford to pay back. It's a loan that's going to be responsible. And so the loan has to be the right fit for you too, not just the right fit for the lender, right? So with the conditions, we're just wanting to make sure that this loan makes sense at this time. For example, are you prepared to grow into your business? Are you prepared to launch, right? And if this is a startup business, for example, have you ever done this kind of work before? Sometimes we hear people who like leave their jobs because they want to open up a cafe, but they've never worked in the restaurant industry before. They've never worked in a cafe or a food business. So we just want to make sure, again, that this is a responsible loan that's going to help you and not just put you in a difficult position where you can't pay that loan back. So this is why the 5 C's are really important. So again, your character and your credit, right? Your capacity, the capital that you've invested, your collateral, and then the conditions to make sure this is a good loan for you. All right, so let me ask you one more question. Do you have a budget? Right? Especially if you're thinking about looking for grants or if you're looking for loans, do you have a budget? Do you have an idea of how much money do you need?
We've got that whole launch again. So that just popped up. This one's real easy, just a couple of questions. Do you have a budget? Yes or no? So same thing. I'm going to leave that open for about a minute until we get all of those responses. We appreciate y'all taking this because it really allows us to kind of chat with you where you're at in your business. So, okay. All right, I think I'm gonna leave it up for like a couple more seconds and then Go ahead and end this. All right, so we got about half of everyone was able to take that, and here are the results.
Hey, yeah, so most of you have a budget. That's amazing. That's great. If you don't have a budget yet, either for, just in general for running your business, to know your fixed expenses, your one-time expenses if you're launching, you should take some time to work on that. And that's something that we can help you here with at AOF. And then of course, if you are looking for funding, you should really work on that budget. So again, we're here to help. Thank you so much for your help. All right. So now let's talk a little bit more about how to prepare to access capital. So now that you have a little bit more of an understanding of what lenders are looking for, um, let's talk about how you can prepare. The first one is, again, create a budget, right? If you don't have that yet, that's going to be your first step because you want to know how much money you need and for what purpose. So having that spending plan is going to be really important if you're taking out a loan. That way you don't you don't take out more money than you need. That's something that we see because at that point you're just putting yourself into more debt than you need. And then you also don't want to undercapitalize, right? Like you don't want to get a smaller funding amount than what you actually need. Because at that point, if you leave you half hanging, right, half funded, that can also put your business in a difficult position. So create that budget. The second step is to gather the documents you will need to apply. Every lender will be a little bit different. Some might require a little bit more than others. But usually what we ask for is like a valid government ID, recent business and personal tax documents. Some might only ask for business documents, also depending on how long your business has been around. But sometimes it's both, right? Business and personal. Usually, we're also asking for about 3 months of business and personal bank statements. And this is for all business, excuse me, all bank accounts that you hold. So that's, it's really good to have all of that pulled together so that when you're ready to apply, you have everything. And then lastly, the business plan if you're a startup, right? Because they might ask for it. So gathering the documents is typically the longest part of the application period. This is what takes the entrepreneurs the longest. So that's why we encourage you to gather these documents before you apply. So that way you have everything ready to submit your application and there is no like waiting period, right? Or a shorter waiting period, I should say. Step 3 is to find the right funding options for you. And you can do this by visiting a CDFI locator. We work with this organization called Opportunity Finance Network, and they created a CDFI locator. Essentially, it's just a way for you to be able to filter through different lenders to find out, which one is the right fit for you. And you can filter through your state and then also like the kind of funding that you're looking for. If it's for a business or a micro enterprise, those usually give you 2 different lists of business lending. So check that link out. I know Emma's dropping it in the chat. And then it's also going to be included in the resources that we're sharing at the end. And then the fourth one is to connect with community lenders. So one thing that I always advise my clients is, when you find something online, don't just go ahead and apply. You want to talk to people first. You want to meet with like a loan officer or maybe, people like me. I'm a business credit advisor here at AOF who will give you a better understanding of what their process is like and also what they're going to be looking for, right? Because you want to make sure that you meet the lender's eligibility criteria, but you also want to make sure that you are asking all the questions that you need answers to. So here are just a couple of questions that I always advise my clients to ask. So for the first one, it says, how are you pulling my credit? Is it a hard pull or is it a soft credit pull? If you're not familiar with the difference, a hard credit pull will leave a note in your credit that says, for example, like Gladys checked your credit, right? And that is when it typically affects your credit score. So you might see that your points go down a tiny bit, but a soft credit pull doesn't have that same impact. Some lenders will do a hard credit pull right off the bat as soon as you submit that application, and the others will only do a soft credit pull and then do a hard credit pull when they're ready to sign. So especially if you're in a place where you are protecting your credit or your credit is not in a strong place, this is why it's really important, right? Because if you apply to multiple places and you're doing hard credit pulls, it could really affect your credit. So this is the very first question you should ask. The second one is, what fees will I be expected to pay and when, right? Every lender will have different fees. Some will have, for example, like origination fees, some have application fees. So this is, and some of them you have to pay up front. For example, application fees, usually you pay up front, but sometimes they're wrapped into your loan. So this is also another good question to ask, right? And that way you also have a better understanding of how much money you're going to pay back at the end of that loan. And then the next one is, do you have prepayment penalties? And we're going to go into this a little bit more, but some lenders will not allow you to pay back the loan early, or they may charge you extra fees if you make extra payments. So that's something that you definitely need to know, a very important question to ask. The next one is, can I have a co-borrower, right? Or who has to apply? For some lenders, for example, will require that anyone that's part of the business is on the application. So others might just require one person that's a business owner to apply for that business loan, right? But if for some reason, or like for example, if your credit is not in a strong place, maybe you need a co-borrower, right? So, if that's the case for you, or if you don't want to take on that loan by yourself, this is another good question to ask. And then the last one is understanding your monthly payment, right? Is it interest first? What kind of fees are going into it? Making sure that you can afford that monthly payment, right? So again, looking at your capacity. So those are just some questions, top five questions that I would ask. And then but if you have any others, or if you want to talk to someone about, what else you should be asking, I'm more than happy to meet with you. And then the last step is just to apply and get funded. All right. So just to give you an example of what a typical, CDFI loan may look like, this is the AOF working capital loan. So here at Acción Opportunity Fund, we lend between $5,000 and $250,000, and our terms are anywhere between 12 months and 60 months. The APR is, including the interest rate, the fees, like everything put together, it ranges from 10.78 to 28.08%. And then we also don't have a prepayment penalty. So if you want to pay back the loan a little bit sooner and save yourself some money, you absolutely could. And then these are our requirements, right? And as we mentioned, every lender will have different requirements, but this is what AOF looks like. We require that you've been in business for 1 year and have a $50,000 minimum annual revenue. We also require a 600 minimum credit score, and we do accept I-10s. And then we also, when you're applying, we ask for a valid government issue ID, and we collect personal and business tax returns, and then also business and personal bank statements, again, depending on your application and your time in business. We do lend all over the United States, except in these states, Montana, North Dakota, South Dakota, Tennessee, Vermont, and DC, and we don't lend anywhere outside of the US. All right. So now let's talk about what you should be watching out for, right? So tell us in the chat, do you think this is a myth, or do you think this is a fact? If a loan is too good to be true, it may be predatory lending. Tell us what you think. Yeah, so this is a fact, right? If a loan is too good to be true, you should be watching out for it. Like, why is it too good to be true? Why is this process so easy? So when you are looking for funding for you, these are the things that you should look out for. These are the warning signs. The first one is, if people have unclear and pricing terms, that's going to be your very first one, right? So with predatory lending, what we're referring to is like dangerous loans that often take advantage of people or have really, really, really high rates and is just super expensive to pay back, right? So with if the lender doesn't have clear pricing and clear terms, and they don't give you, like this is how much you're going to be paying every single month, that's going to be your very first sign. So just be really careful with that. And that's why we always tell people, before you apply anywhere, talk to them, right? See what that is like, see what their pricing is like, what their terms are like, because they should always be able to tell you. The second one is for aggressive or abusive broker practices. So the way that we hear this through our clients is that they'll offer them a loan and then tell them like, if you don't sign by, the next hour or by the end of the day, this deal is gone. Or sometimes they'll spam you and spam you and spam you and spam you and spam you, right? Because they really want to make you sign. So if this is what the case is, just watch out for that, right? The next one is prepayment penalties. So again, if a lot of CDFIs don't have prepayment penalties, right? Because they're for the development of the community, they're here to help you. But we've seen that with other kind of loans or other lenders, sometimes there are those prepayment penalties that you have to end up, you end up paying a ridiculous amount of money just to be able to chip off a little bit off that block of debt, right? I have a client, for example, who gave, I think it was like $200 or something like that extra on that monthly payment, and they ended up charging him like $500 for doing that. So instead, he went backwards. So that's something that you have to watch out for, right? If there are prepayment penalties, maybe don't sign. Look for somewhere else. Look elsewhere. The next one is if the approval is too easy. So this is one, especially for loans that say like, we don't check your credit or we don't ask for documents or get funding the next day. That's what you really should be looking out for, because one, they might not be, looking at your best interest, for example, right? When we review the 5Cs, we talk about your capacity and like how responsible lenders take that into consideration before approving you. But if they're not looking, for example, at your credit, or if they're not looking at how much money is coming into your business and how much money is coming out, and that approval is too easy, what we've seen is that, they're doing that and they're giving you that money because at the end of the day, they still expect to be paid back, but those interest rates may be super high, right? And consumer lending and business lending works a little bit differently. So even we've seen that some business loans have interest rates of like 300%. So be really, really careful with where you're applying. And then if the approval is too easy, ask more questions. Check out why, learn why. The fifth one is abnormal payment structures. And this one, what we've seen is that sometimes you'll have really, really high like weekly payments or daily payments that will just cut your cash flow or may put you into a really difficult position. So that's another thing that you need to watch out for. And also if it changes. So for example, if at the beginning of your loan, you're paying weekly, but then towards the end of the loan, that structure changes and you have to pay bi-weekly, or something else happens, right? Like that's another sign that it could possibly be predatory lending. And then hand in hand is the short-term loans, right? If we've seen that, for example, some lenders will give you a really big loan of like $100,000, but you have, let's say, a month or 3 months to pay that back. And then on top of that, they have really high interest rates, right? So with those short-term loans, again, think about your personal capacity. If you know you cannot afford it, don't take out that loan, right? It's only going to harm you and it's going to harm your business. So just really be really, really careful with those short-term loans. And then the last one is if they're not willing to answer your questions, right? Like we've reviewed some questions, we know what you should be asking. And remember that any loan that you take out should be the right fit for you. It should be a good loan for you. So if they're not willing to answer any questions or if they're pushing you for it, just be really wary of that. I have, for example, one client, he fell into a scam, unfortunately. It was a predatory lender that was just based off of Facebook. So they found his business through Facebook and emailed, like messaged him, got all of his information, and whenever he would ask a question, they just kind of disappeared. And like eventually, he was supposed to get the money, never did, and in the end, he did get scammed. So it was just be really, be really, really careful. And again, ask as many questions as you can before applying anywhere. All right, so now that we've gone through the scary stuff, let's talk about what everyone wants to know, which are grants and resources, right? So we're going to go through some application tips. We're going to learn a little bit more about AOF resources, and then we're also going to find out a little bit more about MSA resources as well. So here at AOF, we have different grant programs throughout the year. And so here are some of our best grant application tips. The very first one is that grants are competitive, so don't rely on them to fully fund your business endeavors. If you are applying for grants, please consider the following. The first one is, don't hire a grant writer or contract someone to do this for you. This is your chance to talk about your business and really demonstrate the value that this grant is going to bring your business, right? How is it going to affect it? How is it going to help you? And a grant writer is never going to be able to portray that as well as you do, as well as you will be, right? So that's going to be the first thing. Just like your business plan, you should be the one towards filling out these grants. So you can really talk about how it's going to impact your business. The second one is to evaluate the time investment and likelihood of obtaining a grant for your business. So, we want to if you know that if a grant is going to take a really long time, it's going to take a couple of hours, and it's a really small amount of money, you have to really think about, is this worth it for me? Or if there are like thousands and thousands of applications, right? What's the likelihood of me obtaining this grant? Because remember that whenever you do apply to a grant, you have to really sit down and do the work so that you do submit a strong grant application. So, just evaluate the time and investment, because you're already busy, you're running a business. So think about that too. The third one is to research grants and select those that you are eligible for. I worked in the past. I have worked with grants and giving away small business grants, and I'm not sure what the case has been with other programs, but with the program that I was working for, the reason that most people didn't get selected is because they didn't read all the instructions and they were not eligible for the grants. Either because, not enough time in business or not the right kind of businesses that we were looking for. And we get it. Sometimes people apply and see, if they catch something, or if they do get the grant, they're lucky enough. But if you are going to be spending time, make sure that you're eligible for this, right? You don't want to spend all this time and then find out at the end that this isn't even the kind of grant that is right for your business. So, research and select those that are the best fit for you. The next one, is to search for grant programs that offer more than money. And this is incredibly important because sometimes, the grants will only give you a check, but there are other programs that will give you like classes. You go through cohorts, for example, right? And you learn a little bit more about how to strengthen your business. So one of the programs that we've done here at AOF in the past, we had weekly classes, I believe, and people really met other business owners and really created that community. But also they were learning about, how to strengthen their business, how to sell better online. And they even got like professional photos taken at the end of their program, which really helped, right, clarify like their products a little bit more. It helped strengthen their websites, their social media, all of that. And then at the end, they got money, right? But what we've heard from so many people is that program was worth more than like the grants that they got at the end of it. So don't just look for grants that are going to give you money. Also search for programs that can really help strengthen your business. And then The way that we suggest that you organize yourself is by creating a calendar that shows the application period of each grant. So create a folder with all the documents that you might need. Excuse me. Create a calendar that shows the application period for of each grant. That way you know when you have to apply, right? So that you are better organized and you know in what order you should be applying to these grants as well. And then the last one is create a folder with all the documents you might need. So a lot of the grant programs will require similar things to loan to like what lenders ask for. So like your ID, your taxes, W-9, right? Things like that. So it's good to just have those documents ready so that you can submit them. And again, you don't have to like shuffle through papers to find your business license, for example, or to find your ID. So if you have all that ready, it just makes the application period so much easier. And then to learn more, we do have some articles that on small business grants, and Emma's gonna drop that in the chat as well. All right, and then just to tell you a little bit more about AOF programs and resources, we have an online learning through the Business Resource Library. So AOF does webinars multiple times a month, and all of that lives in our Business Resource Library. So anything you want to learn about, like pricing or marketing, everything lives on there. And then, as I mentioned, we have educational webinars, and we also host different events. So check those out. They're completely free of cost, and they're a great resource. We also offer one-on-one business coaching, and it's completely free. We have different kind of topics that we can help with. So just let us know what you need help with, and we're happy to assist you. We also have different educational programs. So aside, like the grants that we were talking about, right? Those programs are there to help. And then the last one, as you know, we do offer small business loans. So with that,
Yes, this is
um,
me. I snuck in there.
yeah, tell
Is that
us.
all right? Okay. That's wonderful. There's so many good tips that you shared, and I love that we're moving into the resources section, and then we'll go to the Q&A. So I do want to plug, if you have a question for our for Gladys, for our other folks at MSA, please drop it in the chat or use the Q&A. But I wanted to highlight one of the things Gladys mentioned that is a resource we have for small business owners. So this is called the Learn with AOF platform. And the best thing about it is personalized financial education. So it's easy to sign up. It takes 2 minutes. It's completely free. It is created and crafted by small business owners like yourself. So there's that real world experience in it. And the great thing is no matter where you're at in your business, there's something for you there. So we're going to drop the link for that. So if you're interested in learning more, you can just kind of plug into that and see where there might be something that can help you. And there's templates in there. It's not just someone talking at you. So it's very interactive. Thank you, Gladys. Thank you for letting me hijack. And now I want to turn it over to our partners at MSA for their resources.
Thanks so much, Brittany and Gladys. We really appreciate all the work and effort you all put in there and all the resources that you provide to small business owners. For those of you who are not familiar, Main Street America is a national organization. We are a network. We work with various rural and urban cities and towns, and we promote the health of commercial districts and do that through a variety of different ways, including supporting small business owners directly. One of our great resources for them are our small biz digital trainers. These are a team of expert trainers who are providing a whole wide variety of different resources. The most easily accessible is they have a series of on-demand webinars. Those topics can include anything from optimizing your online presence, cultivating an entrepreneurial mindset, mastering soft skills, and increasing sales. But you can also get involved in group workshops, and you can also register to get one-on-one sessions with them on any of those topics or a variety of others as well. And we'll be sending out resources after this webinar with links to all of these so that you can look out for them.
Amanda. So we know that small business owners are extremely busy. And so we wanted to create a way that they could connect with each other and gain resources and knowledge on their own schedule and on demand. So last September, we launched our Main Street Business Insights podcast, which is hosted by our Chief Innovation Officer, Matt Wagner. And every week on Wednesdays, he interviews different small business owners across the United States and actually internationally now about their experience with starting, owning, operating a small business along Main Street. And we're also starting to expand outside of those interviews, and also we're doing deep dives into economic trends and theories that are impacting small business owners so they can take actionable steps toward improving their business that are backed by trends and data. So recent episodes include a breakdown of 2024 trends leading into the holiday season that just came out this week. We recently did an episode on crowdfunding for small businesses and retail marketing strategies and tons more really great topical episodes. So make sure to check that out. Emma dropped a link in the chat. And we're also on YouTube as well. So we do video episodes of each podcast. So make sure to check out those videos once you get to the site as well.
We also have the Main Street Online tool, which is hosted on our website. And it's a really great way to get access to a wide variety of resources. To use it, you will simply click on the link. You'll go through a little questionnaire that will ask you all about your business and what your current habits are, if you have any online storefronts, for example, or what your current marketing strategies are. And then based on how you answer and where you are in your business journey, you will receive a customized list of tools and resources to help you improve your business in the ways that you're looking to grow.
So the last resource we wanted to direct you to is our small business email list. So this may sound simple, but Main Street America is releasing new small business resources on a very regular basis. And we're really starting to expand that part of our work. And we want to encourage you to sign up for those emails so that you don't miss out on any of those new resources and grant programs as they come out. So make sure to subscribe so that you aren't missing anything new.
So many great resources just between Main Street America and AOF. There are so many. So I know the chat has so many links for you. I promise you, we are dropping all of those links in the follow-up email tomorrow, along with the recording. So don't worry. I know I'm like an open tabber, so I'd have like 20 tabs open. So if you don't have any more tab space, don't worry about it. Okay, wonderful. I think now is a great time to move into our Q&A. We did get a couple of questions here, so please feel free to use that chat to drop additional questions or use the Q&A box, wherever you are, we'll find it. Okay, so Gladys, this question, I'm going to kick it to you. Is there an easy way to check our business credit score, not our personal credit score?
I'm so sorry, my audio cut off a tiny bit. Can you repeat that?
Yeah, absolutely. Is there an easy way to check out our business credit score instead of our personal credit score?
Sure. So with business credit, the easiest way is just to do it through whatever platform you've used to create that business credit. So for example, if you've used DNB, Dun & Bradstreet, right, that's going to be the best way for you to check it. But remember that even with business credit, it doesn't work the same way as consumer credit. You typically do have to pay to check that credit. And unfortunately, there's nothing like a Credit Karma or anything like that for your business yet.
Yeah. Okay, so you if you need to check your business credit score, it seems like you're going to have to pay just because that's the structure right now. Okay, awesome. Next question is, can we talk about ways to support businesses to make sure their character from the 5 C's is described and polished in a way that is favorable to lenders?
So what lenders are looking for in your credit is typically your credit history, right? So every lender will be a little bit different. Sometimes they're looking just at the past 2 years, sometimes like the last four. And we know that things happen. We know that life isn't perfect, and sometimes we really need to dip into like our credit cards and things like that. But what I would recommend is that especially depending on like how much money you're looking for, you want to make sure that your credit and your capacity match up. So for example, if your credit cards are maxed out, then like that capacity changes for you, right? And like those monthly payments are going to be even higher. So the best way to like match those two together is just by having strengthening your credit as much as possible before you apply. And like one of the ways to do that is like try to pay down debt, right? Things like that. But again, so I don't think there's like an exact way to polish it. But if there is anything on your credit, like any late payments, for example, you want to get those taken care of, right? Especially if it's anything recent. We also know that in the United States, there are a lot of people who have errors on their credit. I think it's like 1 in 5 people or something like that have errors. So, check your credit ahead of time, see what that looks like for you. And I think, yeah, I guess that's just like my best advice. Just look at your capacity, try to pay down that debt, and then check your credit ahead of time and see if there's anything wrong on there. Try to see if you can fix it.
1 in 5 people having something wrong with their credit is crazy. But it makes sense. So it sounds like being really diligent and keeping tabs on that. And you can get your personal credit for free. It's a couple times a year, right, Gladys?
Yeah. You can do it once a year through annual free credit score. Emma, if you can please drop that in the chat, that would be great.
Awesome. Thank you. Okay, we got another great question here for Gladys. You're on the spot, Gladys.
That's okay.
Do lenders consider grant funding received? And does it affect their decision at all if you've received grants previously?
To like measure your capacity? Is that maybe the question?
It doesn't say. I'm wondering if the person who dropped this question could provide a little more context to us. But how I'm considering it, Gladys, is do lenders consider if you got grant funding, would that impact their decision positively to give you funds in any way?
I think it could, because that could impact your capacity, right? So if you have some like extra funding in your bank account, for example, and lenders might see, right, that you have those funds sitting there, so it might make you seem a little bit like less risky, right? So I think that's one of the ways that it could help you out. But also, if let's say, for example, that you apply and in the last 3 months you received a grant and it comes up on your bank statements, right? They're gonna want to see where that money is coming from, because lenders, if there is like a big influx of cash and that's like not normal, they want to see where that money is coming from, just so that to make sure that there's like nothing illicit and things like that. So it could definitely be helpful if you've gotten some funding in the past.
Okay. Got it. And they did provide a little bit more information. They said, just wondering if the fact that we've already received grants would make them think we need loans less.
Not necessarily. I think that's why a lot of lenders will ask you what the money is for, and we're not going to hold it against you if you've received more money. That's totally fine.
Okay, wonderful. Awesome. Okay, so next question. What organization works best for startups or pre-revenue? Okay, so this is really asking about where can I go for funding, or what are my options for funding if I'm pre-revenue and startup? So Gladys, I know we get lots of questions like this, so I'd love to pick your brain about this question.
Sure. Yeah. So remember that if you're applying for a loan, they're going to be looking at your capacity, right? So what I recommend is that if you're launching your business, that you still have some sort of income coming in. So if it's either like a side hustle that you're doing, sometimes people, don't leave their jobs until their business is making money. Sometimes it could be that you have a business partner who's working, or like someone in your personal life, like a spouse or you know, whoever who's willing to help you out with that. Because at the end of the day, that's what we're going to be looking for, right? Like making sure that you can prove to the lender that you can pay back. So OFN is a really good resource to find lenders. And so Emma, if you can please drop that link in the chat, is through the Opportunity Finance Network, the CDFI locator. What I would recommend is that, when you filter, and again, you filter through your state, and then you can also filter as micro enterprise and as business under lending type. So just focus on your state and then lending type, micro enterprise, and business. Those will both give you different lists. And what I recommend is that you go through all of the lenders that come up on those lists so that you can see which one is the right fit for you. So you'll have to do some homework, right? Like go through their website and then find out which ones offer startup lending. Because there are some like national organizations that offer startup lending, but they don't offer them in every state. So that's why it's really important for you to like go in and do that homework first. But I think that's just the easiest way to do it, is just to, go through that list, go on their website, find out what kind of requirements they have, and then what kind of loans they offer.
Gotcha. That is really helpful. And that link is in the chat so that we can start looking through. Okay, our next question is about loans again. So Gladys, is a high personal income required when applying for a business loan?
Necessarily, especially if your business has been if you've been in business for a while and your business could prove that they have, like through their business, that you have the capacity to pay those monthly payments, then you should be fine. You don't need like a high income. Remember that it all comes down to your capacity, right? So that to prove that you can afford to make those monthly payments. Lenders will usually also use your current financing, like your current what your finances look like right now. So if it is like personal income that they're looking at, they want to see what it looks like right now. Because a lot of lenders will not take into consideration like what your forecast is. So when you apply, you can't say, like I'm making $100,000 this year if you haven't been there yet, because they're going to want to look at like your taxes, your bank statements, things like that, right? To prove what your income is. So even if you don't have a high personal income, if your business can prove, or if you can prove that you can make those monthly payments, that's really what it comes down to.
Gotcha. Okay, and this question is about tax returns. I know you mentioned like every lender is going to be different, but on average, how many years of tax returns should we have ready?
Yeah, it also depends on the loan size. So if you're looking for a really big loan and you've been in business for a while, lenders will ask anywhere between like 1 to 3 years.
Okay, perfect.
And that's pretty typical, 1 to 3 years.
1 to 3 years. Okay, love it. So have that 3-year ready, and then you'll always be ready.
Yes.
Okay, so we did get a question in the Q&A. How is a micro enterprise defined?
Sure. So I think it depends on where you go, but micro enterprises typically are, smaller businesses. So for example, on that OFN list that I mentioned, when they're looking at micro enterprises, they look at like businesses that are a little bit smaller. So we're looking at, and then also like the lenders that offer smaller amounts based for those smaller businesses. So I think that's really what it comes down to, because I think for small businesses, I think it's something like $1 million or like under $1 million or something like that, right? That's not what we're talking about here. We're talking about really smaller businesses, especially those that are just starting.
Yes, that's always surprised me about the broad kind of folks that fit under the umbrella of small business. That can be so many people. Okay, so I want to there's someone who dropped a question in the chat, so I'm actually going to ask them for a little clarification. What about issuing stock to sell equity? So Patrick, if you could add a little more context, are you wanting to know if that's a good option to increase your revenue, or we'd love just a little more detail. Okay, we're getting really close. Oh my goodness, we're almost at the top of the hour. So while that's coming in, I would love for everyone in the audience, we know how, busy it is to be a small business owner, and your time is so incredibly valuable. So we hope you got something out of today's conversation and would love to hear what is the next step for you after you have attended this webinar for preparing yourself to either get that capital, apply for funding, or apply for a grant. Like, what is on your to-do list, which I'm sure is pretty long already, but this hopefully gave you a next stepping stone. And then if we didn't get to your question today, I do want to let you know the resources do not stop. We want to make sure that you guys have some place to go. So the time kind of got away from me, but we are going to drop our link to the coaching that AOF has, so you can get that 30-minute free session. We've also had so many resources from Main Street America that offer, similar, you get one-on-one services or even listening to that podcast. So please, I don't want you to think we're leaving y'all alone for today. So we're gonna get those links for you so that way you can have that one-on-one support. I want to thank Gladys for taking us through this very beefy topic today. So we appreciate you in handling all of those questions. I want to thank the collaboration of Main Street America joining today and sharing all of those amazing resources with the audience, and also to Amex and their partnership with Main Street America for allowing us to do something like this. So this was really wonderful, and we hope we can see you all in the next one. So thank you all. We will see you next time. Bye, everyone.